You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, OptionsInsider.com, as well as from the network upon which so many people are binging these days. Keep binging. There's more bandwidth where that came from. If you do like what you hear, Vol Views, anything else on the network, throw a like, a star, a comment. You know the drill by now. All of it in aggregate does help new people continue to discover Vol Views and indeed the network at the end of the day. And then, of course, if you too want to discover some great pro Q&As, man, we hit on vol, it seems like every week. So if you like volatility, you want to ask more questions about volatility, some of the best minds in the biz, well then, only one place to go, theoptionsinsider.com/pro. Also, Options Oddities coming up at the end of this show. So if you don't want your broadcast week to end with volatility views, you want more fun in your lives, and hey, who doesn't need a little bit more fun these days? Then Options Oddities coming up right after this show. So theoptionsinsider.com/pro, the place to go to get all of that fun as we go around the horn, see who's joining us today on the old Volatility Views program. First, joining us from the Southern Volatility Mecca, known as Austin, we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views, sir.
Happy Friday. Excited to be here. Lots to talk about.
Lots to talk about indeed. It's like it's a Fed week or something. I mean, who knows? Something must have happened. And also joining us to help us parse the madness that was volatility this week, our good buddy, the once future and now present Dr. VVIX. He's got the paper. It's hanging behind him on the wall. So don't take my word for it. Go check out his Twitter. He has it up there. Mr. RHOADS, welcome back.
Sheepskin or some crap like that?
Yeah, something like
that. I forgot.
I thought yours was on human flesh.
Oh, yeah. It felt like it.
Your own.
I gave
flesh.
A pound to get it, so yeah.
I didn't say whose flesh it was, but it was someone's flesh. So there you go, yeah. Mr. Once and Future Dr. VVIX joining us as well as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We view some vol, see what kind of vol we've got shaping up out there on ye old street. And again, as I mentioned at the top of the show, in case you were living under a rock this week, yeah, it was Fed week. And you know, if you've been listening to the show for a while, listening to the network for a while, Fed week tends to have an impact on the old market. Things tend to happen when the Fed comes to town, and come to town they did this week in a big way. Wasn't too long ago, just a few weeks ago, where Powell and company were saying, it might be irresponsible to speculate on future rate cuts next year and all that fun stuff. Well, that all went out the window this week. They're like, you know what? How's 3 sound? How's 3 sound next year? So the markets love that. Rocket in to the north in the session immediately following that. Yesterday, a little bit more of a topsy-turvy session. We rallied, then we sold off. We rallied, then we sold off. It seems like 4,700 is that new battleground. We hang out north of it. We drive back down to it. We rally north of it again. And we are doing that same dance right now today, listeners. As we're kicking off the show, the S&P started the day green, rallied pretty far north, got north of 47.20. It got up about 47.23, 24 in that range before giving back about 10 handles. Now, S&P now off about 0.1%. The Dow about 0.05%, so slightly green, and the NASDAQ up 0.16%. So it does seem, we were speculating yesterday when we saw that worm turning moment on option block. Was that the moment where the buyers were exhausted, or was it just the pause while they had to go hit the ATM to come back and buy more? Well, today we started off green again today, but it does seem like we are very much poised around that 4,700 strike. Will we continue to rally? Are there more buyers to be found? Is there more capital to be allocated, or is this the extent of it? That's the issue we are settling right there in the markets. As a result, we're seeing our vol friends down, but not a ton. VIX, when we kicked off the show, was at about 12.25, down about 1/3 of a point from where it was this time last week. We did dip into an 11 handle very briefly, not hanging out there now, but again, the session is young. We could be anywhere by the time the show is over. VVIX 86, so looking a little bit frothier than it was this time last week, up about 3 points from where it was this time last week. All right, a lot to unpack. We will start with our guest, Mr. Rhodes. Obviously, Fed week usually brings the heat and the thunder, and it definitely didn't disappoint this week. What caught your eye out there in Fed week this week?
Well, one of the things that caught my eye was the VIX futures didn't react too much. It's like they did a good job anticipating what was going to happen already at pretty darn low levels. And I was kind of hoping for, I was long December and short January at about $1.95. So I was kind of hoping, and that's about where we are right now, but I was hoping he would at least, spook the market at some point Wednesday afternoon and give me an exit opportunity on that. Now I'm just hoping that the January contract grinds down a little bit more and allows me to get out of that thing at scratch. But yeah, unfortunately, we don't have enough VIX history. Or maybe we do at this point, where we could take a look at how nervous the market is in front of, on average, in front of each of the different Fed chairmen that we've had since, I guess, 1990 or so. I feel like the Powell Fed is such a nothing burger over and over and over again that, the press and all of us like to talk about this, but average people are just not getting all fired up about what the Fed's up to anymore. Although my Uber driver did say something the other day about interest rates when they found out what I did.
There you go. The old saying, when the Uber drivers, when they know.
Exactly. You know where I was going with that.
They're the new canary in the coal. We don't talk about cabbies much anymore. It seems like a bit of an outdated notion now. When your rideshare driver tells you what's going on, then, perhaps you have reached the apex out there. Mr. Meatball, same question for you, sir. What caught your eye and came to your attention during yet another Fed week, sir?
I was shocked how inexpensive it was to play the Fed.
Yep.
Ahead of the move, the at-the-money straddle was only priced about $25. We moved 63 points over the course of low to high from Fed day through the top on Thursday morning. The market rallied 100 points. It was rather shocking, and I could not believe how inexpensive they let that at-the-money option get. It was something to behold, and we saw when things get that cheap and the market takes off, you saw what the power of people being short, too many short options at too cheap of a price can do the market, because we got a big gamma squeeze all the way up to 4,700 because traders were caught flat-footed.
Caught flat-footed indeed. Let's see if the rest of the market was caught flat-footed. Let's go out to the land of the VIX futures. See what's popping off out there this week. And as expected, we're seeing that front portion of the curve come down a wee bit. Perhaps a little more than a wee bit. So you have that DEES future obviously heading towards extinction pretty soon. Down almost a full point, about 0.9 of a point as we kicked off the show. The Jan future not far behind it, down about 0.75 of a point. So what little steam, what little juice was left in that front portion of the curve, they are rapidly coming for it. The same can be said across the curve, obviously all of it continuing to come down. Now if we go out to August, wasn't too long ago we were looking at north of a 20 handle out there. Not even in August, you're talking about April and May, you had a 20 handle. Now if you go all the way out to August, the highest you can find is about a 17 3/4 out there on the term structure. So obviously a very different vol regime we find ourselves in right now. Some of that, of course, at least for the front portion of the curve, due to seasonality. But you go farther out in the curve, obviously that has its own rules of engagement, and they are obviously taking the ball off there too. It was kind of head scratching for us. We were kind of wondering for a while what exactly they were seeing out there, where they were pricing so much vol in towards the beginning of Q2 of next year. And it seems like a lot of that now going the way of the dodo all the way out through April of next year. You're at about a 16 and change out there now. So intriguing stuff to be found. Mr. Rhodes, we'll start with you again, sir. What's catching your eye out there in the volatility surface this week?
Much like I said, the bump in January right now, I do feel like that's going to start to slide down a bit for us. You do have a pretty good angle for the VIX term structure going out into, February, March, April, May, which with VIX down, below 12.5, and all these futures having a 15, 16, 17 handle, even when you go out to the summer, that's kind of steep. If you think that I would say if the VIX curve were talking to me, I would say it's cautiously optimistic about next year. How's that? I'm going to use some Wall Street speak today. And I think you guys sort of know what I mean by that. Like, they're a little bit braced going into 2024. I'm going through block trades, et cetera, before we talk today, and I'm already seeing a lot of February and March trades, maybe taking advantage of relatively cheap implied volatility. I hadn't checked VVIX, but I'm going to check it real quick because, it's up like 6 points today. And
it's up today, and VIX futures are up today because they got a little oversold in DEES.
And I was hoping that. My short-term trade for the Fed has turned into a hope and pray that I can get out a little better, and which means I probably should just get out of the darn thing at this very moment.
Yeah, you probably should.
But yeah, I'm not surprised. I didn't know where VVIX was, but when I started to talk about it, I'm not surprised that it's higher. Typically, when VIX gets to relatively low levels at some point, it attracts call buyers because where the VIX future is relative to the index, et cetera, is part of what you take into account if you're considering VIX options expensive or cheap. And a lower absolute VIX future level, it is one of those things that comes into play and often attracts some call buyers. And I've seen some call buyers, and not surprised VVIX was up at all. If you guys had made me guess without looking, I would have guessed it was in the low 90s. So a little bit less than I would have guessed, but there.
I like the fact that the VIX futures speak to you, sir. What other products are talking to you in your sleep? I want to know. What voices is Russell hearing when he's not on the show?
Oh, you don't want to know.
It probably would be a
Don't ask questions you don't want to answer.
Don't ask questions you don't want to know.
That would be the adult version of the show. Maybe we don't want to go there. Instead, let's go down to the Southern Volatility Mecca. Mr. Meatball, maybe the VIX futures also speak to you, in which case, what story are they telling you, sir?
Well, they're the VIX options are actually for a really sleepy day. They're a little busy today. There was a couple of huge trades going up. The curve, December is pricing itself like VIX is going to be 11.5 next week. And the Jan future probably needs to come in a little bit. It's still, if we go to 11.5, that thing is going to be really wide. But the December future is really, really, really cheap relative to where the cash index is trading. The rest of the curve looks pretty normal.
Let's see what's going on out there on the VIX options front. Are things normal? Are things a little bit spicy, a little bit juicy? I guess we'll find out. Today, as the Meatball alluded to, nothing to sneeze at. Already closing in on 500,000 contracts, 483,000. So you might be forgiven for thinking there'd be a little bit more underlying action out there today than we are actually seeing. In fact, when I first was running the numbers this morning, before I even checked the broad markets, I thought, maybe we're having a little bit of a more aggressive red day than I thought. I was surprised to see us kind of vacillating around unched, but getting some decent legacy paper, I guess you can call it, after the Fed really shot us to the moon again on Wednesday. The ADV, go figure, it was starting to get seasonally light, but doing that pretty early coming into the first week of December. When you have a Fed week coming up after that, that number's going to pop a little bit, and it did. 707,000 is the ADV in VIX land right now, up about 58,000 from this time last week. So you can thank Powell and company for that. And then looking at the top 10 size positions in VIX options right now. If you were hoping, if you were wishing upon a star, if the voices in VIX were speaking to you the way they speak to Russell, and they told you, watch out for some VIX puts in the top 10 this week, those voices lied to you, listeners, because there are none to be found yet again. It cost you 214,000 contracts to break into the top 10 this week. So that's a fairly high bar to have to clear to break into the top 10 this week. That gets you to the Jan 28. So once again, it's all calls all the time. And we're kind of all over the place from a month and strike perspective. Number 9, 221,000 of the D's 25s. Number 8, 222,000 of the Jan 20s. So far, dare I say it, these are mostly reasonable. Number 7, 236,000 of the Jan 18s, perhaps one of the most reasonable on our list. Number 6, 254,000 of the Feb 20s. So we're already up to number 6, and so far we haven't seen, I won't call it the nonsense, but the optimistic stuff. My old favorites, the 47 halves, all that good stuff. Number 5, 282,000 of the Jan 25s, getting up there a little bit, but not much. Number 4, 287,000 of the D's 18, so back to the teens even, dare I say it, reasonable heads prevailing out there this week. Number 3, 322,000 of the D's 40s. All right, here we go. A little bit more optimistic, shall we say. Number 2, 343,000 of the D's 35s. And the number 1 size position in VIX options right now, listeners, the comparatively reasonable Jan 26s, 383,000 of those. So, dare I say it, listeners, is this the week where the calmer, the cooler, the saner heads have prevailed out there in VIX options land? Gone are the 45s, gone are the 47 halves, gone are the 60s, and some of the more, shall we say, outlandish stuff we've been talking about for a while. That's not to say they're gone forever. I'm sure if past is prologue, they will return with gusto. But at least for this week, 40 is the craziest we got. So that's interesting in and of itself. And you know what's always interesting, listeners? It's Russell's Weekly Rundown. So let's get to it.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
So nice, we have to hear it twice. Mr. Rhodes, sir, those voices that speak to you, what are they telling you about VIX weekly options, sir?
They're telling me, where's my piece of paper? I didn't have any trades for today, and one just popped up. Hence my distraction. So Monday. If anybody grew up in Memphis, Tennessee, Monday night was AWA wrestling night. If you wanted to fight somebody, you said Monday night, baby, and then you met out by the flagpole and got your butt kicked.
Oh, you might need to come and do our 80s wrestling trivia on the option block on Mondays.
It's 70s and 80s. Jerry Lawler, he was a big Memphis guy back in the day.
Old school.
So somebody's playing the lottery Monday. They bought 1,200 of the December 13th, 21 calls for 3 cents each. It was definitely an opening trade because there were only 66 open when the trade came in. And VIX was at 1277 at the time. Let's just say that didn't pay off.
a little Fed rolling of the dice.
They expired before the Fed.
Oh, that's right. Yes.
I think they were looking. I think it was CPI.
Little pre-Fed rolling of the dice.
Yeah. No, we got CPI on Tuesday, and I thought that might be what they were trying to do because of the timing. That would be my guess. And then looking out to next year, got a lot of January 3rd trades. Somebody used the January 3rd, 2024 VIX options to speculate on lower VIX. They bought 700 of the Jan 3rd 14.5 calls for 82 cents each. I don't know why I said they were speculating on lower in my notes. Tuesday, I think I picked up on a really good exit trade. This is the one I'm really excited about. With VIX at 11.86, and this was Tuesday the 12th, the afternoon before the 13th expiration in the morning, a trader sold 1,600 of the D13th 14 puts they purchased the 14 puts for $1.96, and they sold the 12 puts for $1.10, and that's a net cost of $1.86. But the open interest was very close to the size of this trade, and I did a little exploring. And the entry trade, they sold the December 13th 14 puts back on the 6th, a week ago, for 80 cents, and they bought 12 puts for 2 cents. So they took in a 76-cent credit, and it cost them $1.86 to get out of the trade. So they lost $1.10 on a bullish put position using weeklies. And again, I think maybe that was one where they were hoping for a little bit higher VIX around CPI because the timing, or they just didn't realize that the Fed meeting comes after Wednesday expiration. So on Wednesday, the VIX up around 1227. Those are high levels now. Somebody put on a bear call spread using the D's 27 options. I kind of like this one. They sold the D's 27 13 calls for 97 cents and bought the 14 calls for 57 cents. It's a 40-cent credit. You got to assume just the week between New Year's and Christmas, or Christmas and New Year's, if I see them in the right order, that's not such a, I think that's kind of a smart trade. I think they did that 100 or 200 times. Yesterday, early in the day with VIX at 12.16, we had somebody sell, I hate this trade, 100 of the January 3rd 12.5 puts for 18 cents. VIX doesn't move at all between now and January 3rd. They would lose money on this. And I don't like selling the puts like that when when there's no time value relative to, or there's negative time values, like how I like to say it relative to the VIX index. Later in the day, VIX at 1240, we had a sweep order. Somebody came in and bought a whole bunch of the December 27th, goodness gracious, I think it was the 20 calls. I forgot to write the strike down here. 20 calls for 9 cents. So they were maybe guarding against something happening by the end of the year. And then finally, while we've been talking, somebody came in and bought 100 of the VIX weekly D's 27th call, 19 strike calls for 13 cents. So similar thinking there. Yeah, I'm pretty sure that sweep order was the 20 calls, if I remember correctly. So there you go. There's some weekly stuff. And I tried to sneak in an SVIX weekly trade, and I really couldn't find one of interest.
Yeah, good luck. Good luck finding those.
And confirmation, that is the 20 calls that traded yesterday.
Okay. This is a season for a little bit of dabbling to the upside. Let that be a lesson to all of you out there. If you're doing small size out there in VIX upside, Russell will find you in the weeklies, and he will talk about you on Volatility Views. Those voices, they don't lie to him. So he will find you, and we will talk about your 6 lot here on VolView. So be prepared, listeners, for such fun. Speaking of talking about size, really quickly, I was just checking to see what happened to some of our friends from last week. As you recall, last week in our top 10, they've been around for a while. Number 6 in the VIX top 10 was 232,000 of the Jan 47 halves. Those are still around. They have just fallen to about number 12 now. It's like they pared it down a little bit, down to about 201,000. The D's 45s, there was 222,000 of those from number 8 last week. Those have fallen to 195,000. And my favorite, the March 47 halves, or the Jan, pick whichever 47 half you prefer. The March 47 halves are number 10 last week. 218,000 of those. Those have 198,000 as well. So Those have been pared down slightly this week. Not a ton, but enough to kick them out of our top 10. So if you're wondering why our top 10 evolved so dramatically, that is why, listeners. Let's see what's going on out there today. What's driving the paper out there today? Like we said, closing in on 500,000 contracts right about now. And the big dog out there, usually when it's not a banger day and you're seeing some decent heavy volume in VIX land, you know it's probably a case of like 1 or 2 size trades that are kind of carrying things out there. And that seems to be the case today. We got a big print going up out there today of the Jan 17s. Folks just can't get enough of those today. 126,000 of those bad boys going up today, including a huge block. They just bought them through the offer for 77 cents 100,000 times. That'll do it. That'll give us some action on an otherwise quiet day out there, listeners. Wow, fascinating. Fascinating stuff out there. You like those, listeners? Jan 17 calls expiring on the 17th for 77 cents. A lot of sevens to be found there. Again, this is the season, listeners. This is the time. VIX is starting to get pretty low, pretty anemic. We're going to start seeing these nibbles, not just the 100 lots that Russell was talking about in the weeklies, but a little bit more sizable, 100,000 lots of the Jan 17. So that's why we're looking so active on an otherwise kind of somewhat quiet day, listeners. Number 2, 39,000 of the March 37s for a distant number 2. Number 3, 35,000 of the March 18s. A lot of action on March upside today of the March 18s and the 37s, even though they went up similar size, but about almost 3 hours apart. So unless they're legging us vertical for size, probably not exactly related, but looking similar. Number 4 here, we've got 25,000 of the Jan 11 half put. Man, we're already talking about 11 half puts. I get it. It makes sense. We were in 11 handle not too long ago, but still, just 11 half put on my screen just rubs me the wrong way. And then 21,000 for number 5 of the Feb 20s. So another day kind of all over the place, but the big dog today, Jan 17s. I wonder if the meatballs gobbling up some of those. I guess we'll find out. Yesterday, a pretty decent day, all things considered. 832,000 contracts on the tape. No one massive print like today. It was just a lot of dense volume. 51,000 was the big dog yesterday. That's the D's 15 calls, so getting some upside action yesterday. Number 2, 38,000 of the D's 12 puts. Number 3, 38,000 of the Jan 18s. Number 4, 24, almost 25,000 of the D's 18s. And rounding out the top 5 yesterday, 20,000 almost exactly of the Feb 15 puts. That one kind of interesting. Wednesday, obviously Fed day, probably going to be the big dog of the week, and that was indeed the case. 1.18 million, so closing in on 1.2 million contracts. Another day that was just dense, just heavy across the board. 89,000 of the D's 11 half puts taking the top spot there yesterday. A lot of people chasing some downside in vol immediately after that announcement or leading into it. I go figure. I get that. That gets back to what the meatball was saying. That stuff was kind of cheap yesterday. 63,000 for number 2 of the Jan 18s. Number 3, 61,000 of the D's 11 puts. Number 4, 51,000 of the D's 15 calls. And rounding out the top 5 on the banger day of the week, 41, almost 42,000 of the D's 14 puts. Not to be forgotten, Tuesday said, hey, watch out, Wednesday. I almost got you. 955,000 contracts on the tape. So no snoozer on Tuesday. The big dog on Tuesday, 78,000 again. The D's 11 half put. So 11 half. It's the new strike. It's a new strike everybody's all fired up about. Are you into the 11 half puts, listeners? Am I just crazy for thinking that's a nonsense strike? It makes sense, but also very off-putting at the same time. Kind of like Russell's voices. Number 2, 59,000 of the D's 12 puts. Number 3, 53,000 of the D's 13 puts. Number 4, 47,000 of the D's 15 calls. And rounding out the top 5 on a pretty action-packed Tuesday, 42,000 of the Jan 14 half puts. So, again, a lot of put paper, but none of it sizable enough in aggregate to make it into our top 10 again this week. Monday, again, no slouch. 895,000. Usually heading into a Fed announcement on a Fed week, you get some light days on Monday and maybe even into Tuesday. This week, they were trading it up. That's interesting. 895,000 on the tape for Monday. The big dog, once again, a banger. 100,000 of the D17s. Maybe 17 is just the new 55 strike. That's where everybody's just lining up these days. A year ago, we were talking about all that crazy upside. Now we're talking about 17s. That's where we are, listeners. Number 2, 58,000 of the D's 19s. Number 3, 51,000 of the D's 12 half puts. A little bit meatier there. Number 4, 44,000 of the Jan 28s. That's some of our first real I would say, optimistic upside that we've seen for size this week. And then number 5 on Monday, also in the optimistic category, 35,000 of the Jan 45. So this is an interesting week where we haven't seen a ton of that. And the ones that we had open for size actually got pared down a little bit. So a very intriguing Mr. Meatball, a lot of paper out there. I'm curious what caught your eye out there. And also, are you piggybacking on these Jan 17s today for 77 cents?
I am not piggybacking on them, but I am. They did raise my eyebrow. Very interesting. The March buy as well. Interesting. You also have a bunch of the 18s going up. So there's some volume there today among the VIX call options. Top 5 trades are all VIX calls. Pretty darn bullish. I did note that there is a 11.5 put buyer though. 16. They paid 6 cents for 16,000 of them. I don't know why I mean, unless they sold them, which would be absolutely insane.
Take your flyer on the 11.5 puts. Why not? Why not? Mr. Rhodes.
Why not?
6 cents.
I'm curious for you.
Oh, you know what? It was a 1x2. They bought the 12s, sold the 11s, and paid 2 cents for that spread.
Which one did they buy?
More now. Is the Jan 12, Jan 11.5 put 1x2. They paid 2 cents for 8,000 by 16,000.
All right. I don't hate that as much.
I don't. Looks like they did a total of 20.
Oh.
Total of 20,000. So they did 10 by 20. So that's probably the most interesting trade. That's one I might think about piggybacking, frankly.
Tis the season. You were just talking about put
That's
one
a
by
great
twos.
trade.
You were just talking about put 1x2s last week. It is kind of the season for those too, not just nibbling to the upside. Mr. Rhodes, you like that put 1x2? What about these Jan 17s for 77 cents? Are you down for a little nibble on those?
If I were first off, man, they did aggressively purchase them. You mentioned it, but they did pay 2 cents over the offer price when they did that trade. So they wanted to get it done and go home for the weekend. You know how I feel about buying call options without doing something else in the VIX complex. They're expensive, you know? So if I were doing that, I would be looking at if VIX starts to move higher, either having an exit strategy on those or maybe selling a higher strike call if we start to, to recoup some of that cost or even lock in a profit. That if I buy a call option like that, and it's been a while since I've been that aggressive with respect to VIX, I don't dispute it, but I hope that their plan involves monetizing it properly or trading around it in some way, in some sort of fashion. Whether they're selling other calls over the course of the next few weeks against it, et cetera, who knows? But I don't like it as a standalone trade.
Might be a fun flash poll for our audience. Would you rather buy or sell the Jan 17s for 77 cents right now, listeners? Maybe that'll be a good one to put out to our audience. As we keep on rolling, let's go out to inverse land, shall we? A lot afoot in inverse land this week, including our question of the week. We'll get to that in a second. SVIX right now, 37.20, up nearly 3 points, listeners. 2.8 points from this time last week. Mr. Rhodes, a happy camper, because we hit a new all-time high in SVIX this week, nearly a point higher, 38.18, a new all-time high. Those 30s that we thought were so ridiculous, and even the 35s are just a distant memory in the rearview mirror now. Those are all in-the-money strikes as we're looking at 38.18, new all-time high. You wouldn't know it by the options volume today, though. Only 2,100 contracts on the tape. The ADV is hanging out around 2,800. It's up a couple of hundred this week, but yeah, SVIX, I don't know. That's why I was joking with Mr. Rhodes earlier about trying to find some paper out here. Excuse me. I don't know what it is it's going to take to really generate some more action out here on the options front, but not a heck of a lot of paper. If we're talking size positions in SVIX, listeners, the big dog out there is about 2,100 of the Jan 40s, 4 O's, followed by number 2, 1,700 of the Jan 35. So a little bit of upside, well, one upside, one now in the money strike. And then number 3, 1,500 of the D10 puts. That's a vestigial position, been around for a while and going to go the way of the dodo today. So it'll be interesting to see. And then behind that, we have 1,500 of the March 50s. So we're getting March 50s. What do we have to do in VIX to get to a 50? I don't even want to know. It's too scary. All right, if I don't like an 11 handle, 11 and a half handle in VIX, March 50s SVIX, that's a very different story. Now you're talking 2017 levels and perhaps below. All right, we won't talk about that. Instead, let's get out to what's popping off in SVIX land. Let's start with our resident SVIX devotee, our lover, the acolyte of all things SVIX, Mr. Rhodes. Mr. Rhodes, sir, probably a happy day for you this week. Did you get called away on any of your call overwriting with this new all-time high? What's catching your eye in SVIX land?
A quarter of my position will be called away today. So
I weep for you, sir.
As long as it's above 37, I'm just kind of assuming that a quarter of my position is going to be called away. Which is not a huge deal. I think I've got a $1 or something like that for the options, and I sold them fairly recently. There is an interesting thing on the tape that's got me scratching my head a bit. Somebody, and it's hard to tell with SVIX because the bid-ask spreads are so wide in the options, but somebody sold, or I'm going to say it, somebody sold 291 of the December 15th 34 calls that expire today. The reason I think they sold them is because the underlying was at 37.42 and they got $3.35 for them, which means it was 7 cents below intrinsic value. You just got to assume that was a sell. And then it looks like at the exact same time they bought a 291 of the January 5th. It's a weekly January 5th, 35 calls and paid $3.40 for those. So it looks to me like maybe somebody was just rolling a long option position. And you know, if I do a little digging, I might be able to figure out when they bought the calls that expire this week. But that I find that kind of interesting that somebody's rolling. It really looks like somebody's rolling a long call option position.
Intriguing indeed. Mr. Meatball, sir, anything catching your eye out there in the land of SVIX this week?
Not really. It's just been grinding higher until today, pulling back a little bit. Would love to see it get a little bit cheaper again so I can get back into it. My call overwrite is going to get called away from me. So I will be left without an SVIX position if this thing doesn't pull back a little bit.
My heart bleeds for both of you being called away at such lofty levels in SVIX. How will you sleep at night? I don't know. Well, Russell has his voices. Those at least will talk him to sleep. Speaking of SVIX listeners, and let me just fire this up right now. It looks like we had some of you reporting some hiccups on the live there. I think that should do it now. So you folks should have your live in your hot little hands. Better late than never. What we'll do for all of you out there who couldn't get the early portion of the show, we'll make sure the show goes up first to the Pro podcast feed so you folks get it early out there. Then it'll go up to the rest of the network later on after that. So all you Pro folks who couldn't maybe catch the early show live, you'll get it there on the old Pro podcast feed as we keep rolling here. And yes, our question of the week, which by the way, I did just put out as a quick flash poll about the Jan 17. So we'll see what our audience has to say about that a little bit later in the show. But our actual question of the week right now, listeners, has to do with Mr. Dr. VIX's favorite product, which is, of course, SVIX. Right now, pulling up the holdings coming into today, they are along 25,500 of the Jan 26s in VIX. Also, interestingly, about 132 million in cash. So you're sitting on a boatload of cash if you're in SVIX right now. Obviously, they're in the process of rolling some futures. That probably has something to do with it, but still, that's a heck of a lot of cash if you're buying SVIX right now. Enjoy your T-bill. Your T-bill with a side of vol if you're buying SVIX. But right now, we should say a money market. Enjoy your money market with a side of SVIX. But right now, we're asking you folks, this position, this Jan 26s or whatever VIX calls they're holding out there, does that make you more or less likely to trade SVIX right now? I gave you three choices. More likely because it's safer. Less likely because you're worried that might drag on it, maybe impact the tracking a little bit. Or you're still gun shy after all the madness that went down with XIV back in 2018. Mr. Meatball, we will start with you, sir. If you have a vote, have at it. And then more importantly, what do you think our audience is voting for? And C, what do you think about the SVIX masquerading as the T-bill right now or as a money market?
I mean, it's not a money market. But I think the audience is probably still steering clear a little bit. But I got to tell you, I love it. I'm all about it. I wish the options would tighten up, but but I do like it. You love it as an investment vehicle.
It's a money market with a VIX call kicker. How about that?
Yeah. You can't lose.
Can't lose there at all. Mr. Rhodes, same question for you. You've been our kind of standard bearer for SVIX defense out here on the show. Mm-hmm. You've had time. We talked about this yesterday on TWIFA. I didn't know you were going to be joining us today, so you get a double dose of all things SVIX today. But what are your thoughts on this poll, and then what do you think our audience is up to?
Well, the cash is actually equal to the notional value of the futures that they hold. So it's, they're not, if they own a VIX future that's trading at $14,000 of that, $170 million or whatever they've had. That's what that cash is. I wonder, because they do put it in, they've put it in money market accounts before. I wonder if the interest that they're earning is enough to cover those call purchases.
Oh,
see what I'm saying?
A fascinating research project.
Yeah, no, that's. I might ask them that. I'm doing a lot of research on this one, just because I want everybody to pile into it so I can sell it to them. No, I'm just kidding.
Do you want to let people in on the research you hinted at yesterday on TWIFA for this, or is that a secret outside of TWIFA?
It's a secret outside of TWIFA.
Okay, so if you listen to TWIFA,
I did start doing it a little bit. I couldn't, and it's not a secret of TWIFA. I'm going through some of the really bad days for XIV, and I'm seeing what if they owned the out of the money calls, what would have happened. That's what I'm doing. And one of the drawbacks here is they've only rolled the options once. What I think they did when they rolled the options, I think they rolled them from December to January when the December futures became the minority relative to the January futures. So once the January future was the dominant one, I think that's about the same time. So that's where I'm making my assumptions on which calls they own. And then the strikes, again, we've only got 2 data points on them trading so far, but I'm looking at everything from like 25 to 35 just to see how it would have worked out.
Let's look here what our audience decides. They are, of course, the ultimate arbiters at the end of the day, listeners. And right now, we have 50% of you saying you're more likely to trade SVIX as a result of this change because it's safer. Again, there's no wrong answer here. I'm really just trying to gauge what your sentiment, what your thought process is on this. Right behind it, you're less likely because of the poor tracking. Again, I can see both sides of that. And then also those of you 20% right now who are still gun shy after XIV, I get that too. All of you. Maybe this might make you a little less gun shy though if they got some VIX calls in their back pocket. We'll have to await eagerly the results of Mr. Rhodes' research on just exactly how much of the blow that would have cushioned for XIV back in the day. Maybe it won't be enough to save it completely, but it can at least keep it from going all the way down to zero. So intriguing stuff afoot out there. We had our buddy, where is it? Mr. Jim Carroll chiming in on this one. He said there is potential for the option premium to be a small drag on performance, but it is still far superior to SVXY for those looking to capture short vol with a long position versus short UVXY, for example. Yeah, SVXY. The less said about that one, the better. That one just a neutered piece of garbage out there. We have Felix Augustus chiming in saying, thanks for the heads up. Could that mean it might have options decay issues similar to the 2X and 3X levered products out there? A lot of the decay issues we typically talk about with a lot of the products we're talking about here have to do with the roll yield, which that's more of a futures-based issue. But the options could add decay elements. This gets back to the tracking issue, which is, again, why I've said I'm still kind of on the fence about this. We don't know the answer to this yet. But Mr. Rhodes, if you had to hazard a guess for our buddy, the creatively named Felix Augustus, he wants to know, should he worry about options decay being a factor now for SVIX?
I wouldn't worry about it too much. When you look at the dollar amount, the notional dollar amount, or what, not the notional amount, but what they paid for the options as a percent of the portfolio, it's kind of a drop in the bucket. So it's like a cheap hedge. I'm also trying to back into, I think I have the prices that they paid, looking through the tape and everything. I think they lost maybe a basis point of performance with what they did with the December options. Right now, those 26 calls, they're down. They're down. I don't know. I can't figure out the percent in my head there, but they've lost a little bit on them. I would not. I wouldn't if I owned SVIX now. I would not necessarily, be concerned with the losses on the consistent calls. Also, remember, when you own SVIX, you benefit from that negative roll yield. So maybe they're using the negative roll yield to pay for some of it as well.
Yeah, they have some some cash to burn, as we have discovered here. But yeah, it is an interesting question. Again, the end of the day, the impact on the tracking, it is an open question. We need to have a few expirations under our belt before we know for sure. But it is an intriguing one. Let's keep rolling out some other products that intrigue you. We're talking SVIX, its sibling product, of course, UVIX, at a 15 right now. It was at about a 14.70 when we kicked off the show. So getting a little bit of juice back as this the sell-off has exacerbated a little bit out there. And so it's still down on the week, listeners, about 1.4 points. Doing decent paper today, about 8,000 contracts. The ADV is 9,400, up slightly, a couple hundred from this time last week. So it seems like we are on pace to hit that out there today. Let's just look really quickly. The top dog today is about 1,000 of the D's 14 calls. So expiring next week, though, on the 22nd. The use case for UVIX isn't for a lot of you and doesn't normally leap to the calls, but that's what's leading the dance out there today on a lot of different fronts out there. Yeah, it looks like it's mostly calls, all opening out there as well. In terms of size positions, it is pretty much all calls all the time. We've got about nearly 5,000 of the D17s expiring next week for number one, followed by about 4,500 of the D18 halves for number two, and 4,400 of the D15s expiring today for number three. So again, a lot of upside. The 15 calls expiring today. Those bad boys on a knife's edge right now. So if you long them, maybe take advantage of this little bit of a sell-off to get what you can for them, get the heck out of Dodge. If you're short them, you were happier this morning than you are right now. So again, you're poised right on that knife's edge. We shall see. Mr. Meatball, anything catching your eye out there in the world of the ever-eroding UVIX, which on this pace is going to need another reverse split soon, sir?
Well, it's having an update today. Like I said, VIX futures are rallying a little bit. The action today, the biggest trade is a call seller for next week. You also have a call roller. They in on these 14 strikes. Not a ton of action here, but it is definitely decaying at a nice torrid pace. And I think unless there's some legs to what's going on today, I think you're going to be looking at it sub 10 potentially by the end of the month.
Does seem like it's on that course. Mr. Rhodes, I know you're all tied up in SVIX. Do you mess around in its sibling product at all?
No, I don't. I have seen an awful lot of option activity in it, but no, I stick with the short one. And you want me to talk about the other one, but I'm going to say something I just saw on SVIX. Since they started buying call options, their AUM has gone from 170 million to 130 million. So it sounds to me like it just kind of looks to me like, and it's not due to bad performance. The thing's been going up. But 43 million has come out. It's gone from 173 million just after they announced that they were going to start buying those call options down to 130 million. So,
do you think that's it, or is it related to maybe people just timing their short vol and saying, VIX is down to
I could see that too. I could see people people choosing to redeem, etc. But here's the data point that really gets me is on the last day. Everybody gets judged at the end of the month or the end of the quarter, and there was $140 million on November 30th in that fund, and the next day it was down to 129. So it sounds to me like a big holder probably liquidated $10 million worth of their holding.
Mm-hmm.
Yeah, it's just interesting. So, maybe there are institutions that are not particularly happy that they're putting, they're like, if we want to hedge, we'll hedge ourselves or something along those lines.
Certainly see that. I don't think it's also unforeseeable, new all-time highs. Some people taking some skin off the table as well. Could be a little bit of column A, a little bit of column B. Again, the institutions are debating what we're debating right now. That's why it's our question of the week. Is this a good thing or a bad thing? Real money at stake here, listeners. Make your voice heard at options. It's going to expire probably a little bit after the show. So if you're listening after the fact on the podcast, if for some reason you're not following us at options on Twitter, you missed your chance. Luckily, I think we'll keep the flash poll open. It's going for a little bit. We'll have a go into tomorrow. Why not? Just for fun. So you have a little bit of time to play with that, because it seems like some folks are getting they're bit in the teeth about that one. Our buddy Mr. VIXologist already chiming in. Now everyone's loving that one, so we'll let that run for a little bit. As we keep on rolling, listeners, it's time for the segment of the show. I know you all, you love the whole show, but the Crystal Ball has its own cadre of fans out there, so it's time to please them. It is time for the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. And as we're talking here, listeners, the markets have turned a little bit. The worm has turned a little bit. As you mentioned, we just saw UVIX getting a bit of a pop. And that's as a result of a little bit more red to come on the screen. NASDAQ just ticking red a little bit ago, down slightly on the day. The S&P off about 0.25%. The Dow off about 0.15%. So we have turned red in all of the major indices. Well, I haven't brought up small caps. Let's check out small caps. Small caps down 1.2%. So once again, small caps doing their own thing and doing it to excess, as they are wont to do. Small caps, a fascinating story. Check out TWIFO yesterday if you want a little bit more info on what's been going up out there in small cap land. But that brings us to the most difficult, the most dangerous portion of the show, which is the crystal ball. These days, a very intriguing one, listeners, because looking right now, again, with VIX this low, does make getting that pinpoint accuracy, I won't say easy, but easier. And because obviously when we were bouncing around the 30 hand, we'd never, all this time, have never changed our goalposts. We never widened them out, even though some people were on me to do it. Oh, we're at a 30 handle. The margin of victory should be more than 1/10 of a point. And I saw that, but you know what? We stick to our guns here on the show. So we kept it 1/10 of a point. When VIX was rocking, we're going to keep it 1/10 of a point right now when VIX is a little bit quieter out there right now. And looking at ye old VIX cash coming into right now, I was at a bullseye not too long ago. I was at 1221. We were at 1229. It has ticked up now to 1245. So that puts me ever so slightly. If I had run this segment a few minutes earlier, listeners, I would be at yet another bullseye for the week. Alas, that is not the case. 1245. Let me just re-rack it right now, listeners. That is my prerogative as the host. Oh, 1247, ticking up against me. Let's stop doing that. 1221 is where I am, listeners. So no, close, very close. Some might say shockingly, just give the man his points, but I won't do that. No, I will not. I will resist your cries. And instead, I will say close but no cigar for myself. Actually, I take that back. That was the meatball. They put that in there under me, but that was the meatball. Meatball was 12. I thought that sounded. That's palindromic nonsense. That's the meatball. So he was close, but no cigar for you. I was at 11 3/4, which was not as you recall, though, I wanted to be higher, listeners. But out of charity to my co-hosts, I went lower because I let them go first. So that was the niceness. I wanted to be around a 1220 something last week. So 1175, alas, for me. So no joy there. And our buddy Greg Magadini from Amber Data was on with us last week. He was at 1197. So no joy across the board. Looking at some of our listeners, some 13 handles, a bunch of 12 handles. Our producers will go through. I don't see anything off the top of my head that leaps out to me that is exact, but our producers will go through, let you know if you have a winner chicken dinner. So Mr. Meatball, you are the closest without going over this week. What do you feel for this time next week, sir? What's your palindromic?
Well, until we got this little sell off, midway through the show, I was looking like a bullseye.
You were a bullseye right there.
But alas, it's not at 12:30. It's at 1 o'clock Central.
Yes.
That we must guess. I'm gonna say 12:21.
I almost started typing it. I knew that's exactly what you were going to do again, but I didn't want to put the words in your mouth. 12:21 for you. Our guest was the next closest as Greg, so that means Mr. Rhodes, you get to go next. What are you feeling for this time next week? You got a 15 handle in you? 16 handle?
No, 1180. That's 1 penny under the 2023 low.
1180, says Mr. You're not playing the Russell Rhodes role. You're supposed to be, I should make you guys both guess really quickly. Our question of the week is going right on. It's our flash poll, actually. A lot of people are chiming in. We asked them, would you rather buy or sell the Jan 17s for 77 cents? What do you think they're choosing? Mr. Rhodes, what do you think they're choosing? Sold or buy?
I know because I just voted.
Oh, you did.
So
okay,
I don't want to,
Mr.
I could say 55-45. And
Mr. Meatball, what do you think is winning?
I'm gonna guess buying.
No, 55% say sold to you, 45% saying buy them. That'll go for a little bit longer. It was buy them earlier, so we're flipping all over the place, which is kind of fun. All right, listeners, get your voice. We'll extend that so you guys can play around for a little bit. If you're listening on the podcast, that will be live too. Get in there, add options, make your voice heard. All right, 1180, 1220. I hate to go into the 11 handles. And I don't know. Some might argue most of the catalysts for the year, are done, but there's always some unknowns lurking. So I'm going to say a little bit of juice to the upside this time. I'm going to say 12 double, a 12.55 is where we will be this time next week. So that is your market for next week. 12.55 on the upside, aka the correct side for me. Mr. Meatball's palindromic nonsense, 12.21 in the middle. And Mr. Rhodes taking the uncharacteristic downside at 1180. What is your guess? Get it in if you're listening live. If you're listening after the fact, get it in. Add options on social media, questions at theoptioninsider.com. All those ways work. And if you get it in today, you too can be entered to win fabulous prizes. All right. That music means we've concluded another fun journey through the world of volatility. But before we go, Mr. Rhodes, if folks want to check out what you were talking about yesterday on TWIFO with your crude, crazy upside, or maybe keep abreast of your research into all things XIV, where should they go? What should they do?
The easiest thing to do is just follow me on Twitter. Anything I do, I just automatically put it up. So there. At Russell Rhodes.
There you go, at Russell Rhodes, 2 S's, 2 L's, RHOADS, all one word. It's a mouthful, I get it. Once you type it in once and hit subscribe, you should be good and never have to type it again. So give him a follow over there on the old Twitters. And Mr. Rhodes, or Mr. Meatball, yours is a little bit easier at Option Pit, all one word there as well. What can folks find if they head over there, sir?
Yeah, we're putting out great content every single day around what the markets are doing, what's going on with VIX, how I'm playing this market, and I've got some funness that going on right now. I just did a huge trade that I'm going to talk about today, and we're looking at having a jolly good time. Go to optionpit.com and subscribe to my Trader's Edge newsletter. You will be a better trader for it.
Jolly good time indeed. Seasonally appropriate over there in the land of the pit. Looking at our live chat now, we got 12 handles flying fast and furious. Got an 11.75 coming in. All kinds of levels coming in. Get your prognostications in, listeners, and we'll get them all tabulated for the fun next week. That's going to do it for us on the on-demand fun this week. If you are one of our legion of on-demand listeners, that will conclude your broadcast week with us. I want to thank you for joining us throughout the week. Remember, if you missed anything, it's all available there on the full podcast feed. Another reason why you should be getting our full network feed. If you just get involved views, you're missing out on a whole heck of a lot. We'll be back a little bit later on the pro side for Options Oddity. So if you haven't checked out the pro yet, what are you doing? theoptionsinsider.com/pro, the place to go to learn more about all that fun. And that's a fun show. Stay tuned for that one. Back again on Monday, of course, with a little bit of the option block. Might have to get Russell on there. I didn't know he was a 80s wrestling man. He can guess in our 80s wrestling trivia, which is always fun. Coming down to the wire for that one, listeners. Who will win the belt? Literally and figuratively. We will find out soon on the 80s wrestling trivia. And then all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.